Investors are betting on a U.S. default. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Heresy Financial. The 4th of June 2025. The U.S. debt ceiling has once again been breached, reigniting anxieties about the nation's fiscal stability. While many dismiss the possibility of a U.S. default, a growing number of investors are taking the threat seriously, re-evaluating their strategies and exploring hedges against potential economic turmoil. Heresy Financial recently highlighted the reasons behind this rising concern, suggesting that a U.S. default, while still unlikely, isn't entirely off the table. The recurring drama surrounding the U.S. debt ceiling, the legal limit on the total amount of money the U.S. government can borrow, is nothing new. However, each time the ceiling is approached, it serves as a stark reminder of the nation's mounting debt obligations and the potential for political gridlock to trigger a crisis. While historically, the U.S. has always found a way to raise the debt ceiling, the current political climate and the sheer magnitude of the national debt are fueling skepticism. The government's ability to navigate these challenges hinges on bipartisan cooperation, a commodity in increasingly short supply. Historically, U.S. Treasury bonds have been considered the safest investment in the world. However, the constant debt ceiling debates and the accelerating pace of debt accumulation are eroding the confidence of foreign investors. This waning confidence could lead to decreased demand for U.S. debt, potentially driving up interest rates and exacerbating the problem. A U.S. default doesn't necessarily mean the government will be unable to pay its bills entirely. More likely, it would manifest as delays in payments to bondholders, Social Security recipients, government employees, and contractors. The ripple effects would be devastating, potentially triggering a global recession, disrupting financial markets, and severely damaging the U.S.'s reputation as a reliable economic partner. One of the most concerning trends is the rate at which U.S. Treasury debt is growing compared to the nation's GDP. When debt grows faster than the economy, it becomes increasingly difficult to service the debt without imposing significant burdens on future generations. As interest rates rise, the cost of servicing the U.S. debt becomes increasingly burdensome. A significant portion of the federal budget is already allocated to interest payments. And this figure is projected to grow substantially in the coming years. This puts a strain on other vital government programs and limits the government's ability to invest in future economic growth. Throughout history, gold has often served as a safe haven during periods of economic uncertainty and debt crises. As a tangible asset with limited supply, gold tends to hold its value when currencies depreciate and other investments lose their appeal. Many investors are increasingly turning to gold as a hedge against the potential fallout from a U.S. default. History is replete with examples of government defaults, from ancient Rome to modern-day Argentina. These defaults serve as cautionary tales, highlighting the severe economic and social consequences that can result from unchecked debt and unsustainable fiscal policies. Understanding these historical precedents can help investors better assess the risks associated with a potential U.S. default. While a U.S. default remains a low-probability event, the growing concerns surrounding the national debt and the political landscape are prompting investors to re-evaluate their risk assessments and consider strategies to protect their portfolios. By understanding the underlying risks and learning from history, investors can better navigate the uncertainties and position themselves to weather any potential economic storms on the horizon. The key takeaway is not to panic, but to be prepared and proactive in managing risk in an increasingly complex global financial environment. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: dinarrecaps.com